Hello and welcome to this week's episode for SPY Trader Now. I am your host. My name is Ken, and our model portfolio is up 24.58% year to date. We have a green for our stock market strength color signal. Here at SPY Trader Now, we want to beat the returns of the S&P 500 buy and hold investor. Their portfolio is currently up 21.94%. So we are accomplishing that goal by beating that portfolio. Last week, the S&P 500 gained 1.15%. This here is a weekly chart going back for a duration of 5 years. And these are candlesticks right here. Now, on this chart here, we did have a pullback of 9.6% from here to here, as you can clearly see. And then we have broken out of that range, and we are still in this range right here. You can see here in the thumbnail how we are, and especially on last week's action, how we are now making new all-time highs in the S&P 500. We do have a negative divergence on this chart. So on the MACD, which is this oscillator down here at the bottom, you do have a lower high right there. And on the price action, you have higher highs. So that is referred to as a negative divergence, and it will absolutely resolve itself after we break out above this line, which we have not done so. But we are beginning to show signs that we are resolving ourselves, because the MACD has now gone positive above its signal line. The slow stochastics is above 80 and showing strength. So with all of these things on this weekly chart, we are seeing bullishness. Last week, we did make one trade. Now, I did tell you on October 4th that I was going to take on this trade and buy 200 shares of SPY. So I did put that trade on Monday, October 7th at 8 a.m. Pacific Standard Time. So the exact trade is right here. And at that time, I paid $571 a share. So I got it for a little bit better price than that limit price of $572. But intraday, it actually went lower than that, but I put the trade on so early in the day that I didn't get that very low price. Here are all the trades that we've made in calendar year 2024. We currently have one open position where we have 200 shares of SPY, and we are profitable in that trade by $1,626 or 1.42%. If you want to see how I trade this portfolio throughout the year, go ahead and smash that like button down for me, subscribe to my channel, and ring that bell to be notified when I post a new video. Okay, here is our model portfolio in blue compared to the S&P 500 buy and hold investor in pink. So on a percentage basis, you can compare the two portfolios. Both portfolios are doing very well with their year-to-date returns of 24 and 21%. So both portfolios are doing absolutely very well. I'm wondering if I am going to be able to get our model portfolio up to 30% returns in calendar year 2024, which would just be incredible triple-digit returns. So that's what we're trying to achieve right now, considering we are just about at the 25% year-to-date return mark, and we still have plenty of time left to go between now and the end of the year. All right, now we are looking at a daily chart candlestick going back 6 months duration for the S&P 500. Now, we did purchase those 200 shares on this down candle, so that kind of helped us. And in actuality, we actually got lucky that Monday was a down day. But when I made the purchase, I wish I'd have made the purchase late in the day and captured that, but I did not. I caught it. I actually wanted to make the trade earlier, so this way it would give my subscribers time to go ahead and buy in if they wanted to. And we purchased that closer to here rather than down here. So if waiting would have been more prudent, but that hindsight is always 20/20. In any regards, right now we are doing very well because the market has since moved up and with that market action. Here you can see that negative divergence with that MACD going down and the price action going up. And that's pretty much all I want to show you on this chart right now. Oh, another thing I can point out here is that on these moving averages, you can see I've got exponential moving averages here, the 8, the 13, and the 21. And on all three of those, we did pull into those moving averages, but what we did not do is the moving averages did not cross against one another like they did right here. They all stayed in line with each other. So that action is bullish action that we're seeing. So this, and we're breaking out to all new highs. We are so strong that we can't even get the moving averages to cross below one another. All of these things are positive and bullish action. Another thing, you can see that the distance between the moving averages here, 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 and here are all getting larger away from one another, telling you that you're in an expansionary mode like you were here, here, and here. So eventually this is going to begin to top, flatten out, and then come down. But right now we are in an expansionary phase. So we're expecting this to continue before it does that flattening out and then pulling down. So that's the expectation. We'll see if that actually follows through. All right, now we are looking at a ratio chart for the NASDAQ 100 against the S&P 500. So the ratio chart is the one that is in red and black. We also have the S&P 500 in dark blue, which is right there. And we have the NASDAQ 100 in black, which is right there. So what's happening? Well, and I also have on here a 10 period and a 50 period moving average, okay? Right now, the ratio chart is above the 10 and the 50 period moving averages, which is bullish. And your NASDAQ 100 just moved sideways last week while the S&P 500 advanced. So all of these things are telling me that this is a risk-on scenario and we are bullish. Okay, now we are looking at the VIX volatility or fear index, 3 ranges. Below this range is the low range, and that is bullish. Below this green line is the ultra low range, which is also bullish. And above this green line is the upper range, which is bearish. Where are we at? We are in the so-called bearish territory, but just barely. Anything above 20 is considered going into the bearish range. We're at 20.46. We're so close. It's, right on the borderline here. And I'll tell you what, it looks like we topped right there, and it looks like we are going to be traveling down like this towards this lower line, kind of like what we did from here to here. Well, what is the market going to do during that time frame? Well, from here to here, the market did come down a little bit, but bounced and then recovered and then had a very nice up leg. So we're looking at action like that happening right now. All right, now we are looking at things from a seasonality standpoint. And what is happening here? We are in the month of October. This is a chart going back 5 years on seasonality. For the month of October, there's only a 40% probability that you're going to close the month higher than when you opened the month. That means that there's a 60% probability that you are going to close lower. Well, what's happening for the month of October? Currently, the month of October is up 1.01%, but there's a 60% probability that you're going to have a red candle this month and not a green candle. So from a seasonality standpoint, we are bearish. All right, now we are looking at a 3-year weekly chart for the S&P 500. And these are our candlesticks right here. This cycle low right here represents that one. This one represents that one. This low here is really a little bit yet to be determined, but it might be that low right there, that low, or it's coming out to hit us in a couple weeks from now. But from right now, what we're looking at is we're looking at an expansionary phase. You can see the market is traveling up, okay? So I've got in here a couple of different scenarios, and I also have a target zone right here, and I've got the system here on Thinkorswim to send me an alert on my cell phone if these targets are met. And let me show you one thing that I'm going to draw in here. What I'm going to do is I'm going to draw in a Fibonacci extension, which is this tool right here, Fibonacci extension. And we're going to grab it from this low here to this high here, approximately right there, and bring that down to right there. And let me blow that up and bring this down so you can see this really well. And what I'm saying is the target is about the 127.0% Fibonacci. We've already hit the 100. So the 100 is already hit. Now, I've got in here a couple of different scenarios. Let me just highlight that so you can see it. So on this one right here, this would be a very conservative target where we're just going to have a little bit more advancement past the 100% fib before we start to go sideways and then pull in a little bit. This one here is a little bit more aggressive, where we're going to continue up about 3% more, approximately hit the 127, and before we start backing off. Now, I want to point out to you this line right here. So I have in here standard deviations. This is the +2, -2 in gold, +1, -1 in pink. Now you'll notice on the market action that happened back here, you'll notice that we came to a 1.5% standard deviation before we topped and went sideways to slightly up before we pulled in. So I took that line and I drew a parallel line with the standard deviations and brought that up. That actually intersected with the 127 right in this neighborhood right here, about 3 percentage points higher than where we are currently at. So what I am thinking, where my head is at, is that if indeed we are going to advance here like this, and we do ultimately hit my targets that I've got identified right in this range, about the 127 fib, well, at that point in time, I'm going to start taking chips off the table. I'm going to either start buying puts. I'm going to start doing in the money covered calls. I'm going to do things to protect the portfolio is what I'm going to be doing. So that is where my head is at, what I plan on doing. Now let me show you those particular alerts that I have, because I've got two of them set up. I've got one set up at 593.49 and another one just a little bit higher, 597, going up a little bit higher, just below the 127 really. So if we start getting in this neighborhood right here, about 3 percentage points higher than where we're currently at, I'm going to start taking steps to protect the portfolio compared to the way the current portfolio is positioned. Let's go ahead and switch over and go to a 1-year daily, change our cycles to 1-year daily over here. And also I've got in here what my prediction on what I'm thinking this market is going to be doing before it pulls back right here. All very subtle action, all bullish, where we're just kind of coming up to a cycle high, coming in, coming up, coming down, coming up, and then coming down. All bullish stair-step action. So, and I'm expecting up action over the next 2 weeks. And you can see those alerts that I've got kind of right over here. So this is the action that I'm kind of looking at and expecting. We're going to be grinding higher, slowly grinding higher. Nothing is telling me bearishness in this chart. All right, now we're looking at a spreadsheet that I created in order to determine the strength of asset classes and the 11 sectors of the S&P 500. We do have greens going across both of them for the strength signal, and we want to compare last week's reading of 81% to this week's reading for the asset classes of 87%. Bullish. More green on the screen, bullish. Last week for the 11 sectors, 83. This week, 88. Very, very bullish. So nothing is telling you that there is bearishness looking at this data. All right, now we're looking at a chart TNX, which is going to be the 10-year Treasury yields. This is a 1-year candlestick chart, which these are the candlesticks right here. I also have on here in blue the S&P 500 and in black TLT, which is 20-year bonds. So what happened? I put in a prediction here in lime green that I felt we were going to go up, and indeed we did go up. I thought we were going to stop at this line right here because that is where we had topped before, but lo and behold, the market said no, and it decided to go higher, so it continued to go higher. It does appear to have put in a top right now, right about here, so kind of mimicking this activity right here and respecting some type of a line right there. So my expectation is that now we are going to be falling down back towards this lower trend line right here. If indeed that is going to be happening for the 10-year U.S. Treasury yields, the market, the blue, which is the S&P 500, should like that action, and it should continue to go up during that time frame. And TLT will probably also go up during that time frame. TLT absolutely hated it when we went from a low to a high on the yields. You can see how much TLT absolutely took a bath during that time frame. Okay guys, I just gave you a ton of information in this video. Now comes the critical thinking. What are you going to do with that information? Well, as of October 12th, 2024, the market summation, according to me, Ken, your friendly host for SPY Trader Now. The charts are telling me this market wants to go higher from here, so I am cautiously bullish. We are long this market, as you know, from the transaction that we took on. But we don't want to put on leverage here, so I don't want to put on long call options right at this juncture because of where we stand and all the information presented to me. We will watch the market action next week to determine if our position sizing needs to be adjusted. But for right now, we're okay. Now here is our portfolio. We do have 116,000 in stock, but we do have $8,580 in cash. That gives us cash in order to play options if this market starts getting away from us. If this market either starts trailing down like this, then we could potentially either start putting on some call options depending upon what we're seeing, or if we think that we've gone down and we're going to have a quick bounce up, maybe we want to put some calls in right there and just wait for that bounce and then profit off of those calls. We have to let the market tell us what we're going to do. Right as of now, I like the way that we're currently positioned with our 200 shares of SPY. We're going to sit tight with that. Remember, the market is an 800-pound gorilla, and this 800-pound gorilla right here is going to do whatever it wants to do whenever it wants to do it. I hope you got some valuable information out of this video. If you have not done so already, smash that like button down, subscribe to my channel, and ring that bell to be notified when I post a new video. I thank you and wish you good trading.